In this video, we share how elite traders are eclipsing their PnL records in this volatile market. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Watch as we share one of the most profitable trading setups of the past month on our desk in step-by-step detail so you can grow your trading account.
All right, so this was a trade I made the other day in INO. I was taking the backside of it, and I also had a breaking news event that came in to help assist the backside. So the idea of a backside is that stock is near vertical on the daily, and on this day, this was the first day that we had an opening drive lower. Stock was getting below VWAP, holding below VWAP, and then began to roll over. Thereby showing a weakness which was not seen in prior days. Price ended up rebidding above VWAP but was unable to move meaningfully away from price, which therefore confirmed the short thesis, and then ended up putting in a lower high to short against for a trade to hold for a longer intraday or potentially multi-day move. Just like a general note, just risk 10% of your daily stop per lot that you add.
Okay, why did I ask for all of you to review this play? So a couple of days ago we said, hey, who traded this? Do a playbook trade, send it to me. Why did I say that?
There's a lot of opportunity in this trade. It's generally pretty clean compared to some of the other setups similar to this.
100%, two reasons. So one, Dr. Steenberger wrote a blog post today talking about how people get better. People get better by building from their strengths. Spend some time on your weaknesses, but you get better building on your strengths. You don't beat yourself up with the things you're not good at. None of us in this room can play in the NBA. If we spent all of our time beating ourselves up about the fact that we can't play in the NBA, that'd be a complete waste of time. All right, we also, we're not global macro traders. If we beat ourselves up over how bad we are at being global macro traders, that'd be a complete waste of time. We're price action traders. There's some guys in here who are really damn good at it. And just to take a half a step back, last month was the best month that the desk in New York has had to date. One of the traders made about 1.4 million. One of the traders had their first $1 million month. Lots of guys had personal bests. I think Dr. Steenberger talked about this as well, and had lots of month reviews. In all the month reviews talking about how to get better. 10 days into this month, we've done better this month than our record month last month. We didn't sit around, all the guys who had record personal bests are thinking about how to get better. We didn't sit around talking about all the things that they did poorly. We sat around and said, how can we get better? One of your colleagues today was in Boeing on the short side. I think you know who it is. I won't mention any names. They're probably listening. I really won't mention any names. And the person wanted to make more money and was like, man, this is a great opportunity, I should have made more. And so one of the things you cannot do in an opportunity like this and say, well, how do I make as much as Shark did or Swang did in an opportunity like this? This was one of the best trades that we've had over the last 6 weeks. This was hands down one of the best trades. One of the top PnL trades over the last 6 weeks. And another reason why we're going over this. And so, the trader sort of asks, hey, Boeing's a really good opportunity, how can I make more? You're not going to be Shark, you're not going to be Swang right away. But what you can do, and what I did say to this trader is, well, how can you be 10% better in this idea? Specifically, based on your trading system. Where could you have shorted more in this case? Staying within your guardrails. Where would you have executed specifically? Where would have your stop been specifically? What's the playbook trade in your playbook specifically? Where was the see it moment specifically? Where was the see it moment specifically? Okay? And how we're putting together a good trade. Thesis plus playbook in your setup plus see it. Did you get in at a good price? Where would you have to get in? What price? Fight for price. That's a good trade. Okay, thesis plus playbook Set up in your playbook, plus see it, plus fight for price equals a good trade. You got to go back and say, hey, here's where all those things, here was the playbook, here's the name of the playbook trade in my playbook that it was. Here was my thesis, which you're talking about with your trade idea. Here was the see it moment. Here's where I should have gotten in. And based on my experience right now at this point in my career, which in a year, you're going to be a lot better. Next time you see a trade like this, you want to be better. And it can be very frustrating, perhaps, to say, I should have made $200,000 in that trade, or one of the traders made an enormous amount. But you can make 10% more next time. You 100%, that trader could have made 10% more in Boeing. That's a realistic goal. That's a good exercise to go through. All right, what do we got with this particular trade? If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So looking at the big picture, we were coming into this day, there was increased skepticism around the way the virus was being handled in the U.S. with getting test kits out and getting test results coming in. Also on this day, crude was down about 20% from the open as a result of an oil issue. The market also went limit down for the first time within the first few minutes of the open, which was something extraordinary to be able to sit through and experience. So in terms of intraday fundamentals, the stock has been behaving like a low float, even though it isn't, with regard to the range and how it just trades. After coming out last week, they stated that they were developing a corona vaccine, which would be in clinical trials in March. They also had breaking news later on in the day when Citron came out and stated that the SEC should immediately halt this stock and investigate the ludicrous and dangerous claims that they designed a vaccine in 3 hours. This was a serial stock promotion for years. This will trade back down to $2. Investors have been warned. It was also noted that in doing a little bit of background research that this company hasn't produced a viable drug in decades. And then the company also announced an at-the-market offering of $50 million, which could help act as downward pressure on the name. And then ATR's $1.31, average volumes over 17 million. The R-vol on this day was significantly elevated at almost 9. Short float, with the sources that I have, I was finding the short float to be anywhere between 13 and 30%. The float of the stock is 97 million. The institutional ownership is really low at 44%. And on this day, it was gapping up more than 30%.
2 things. In Chark's daily report card, he got real excited to trade this particular opportunity because he noted there was an ATM before the open and started to work into positions that obviously worked. Second point is Citron, for stocks that are not tier 1 stocks, or are up on spurious reasons, is really good. That's his sweet spot. This is the type of stock that's Citron's sweet spot. This is the type of stock where he is going to move the stock the most. And you have to notice the patterns with his tweets that move the stocks the most. This is one of them. What he's not good at yet, he's not good at Tesla, a real tier 1 company that lots of institutional investors are in. I think we all remember a sharp decline after one of his tweets, and then the people who shorted got their faces ripped off. He's not good at Shop, another, for now, pretty legitimate company, though he sees things differently. So he's not good in those tier 1 bigger companies, but he's really good. He's really good, and you should recognize the pattern. He's really good on some of these lesser names.
So this is just looking at the daily chart. As you can see, it's been pretty sideways, but as of recently, in the past couple of months, we've been curling up, and as of recently, as the past couple of weeks, we've been getting nearly vertical in the name. This red day is the day that we'll be looking at. Let's just looking at a 5-day. As you can see, we made a move into the close on one of the days when they made the news announcement, digested it for the day, and started a vertical climb the 2 days leading up to this one day. This is just looking at the 5-minute and the 1 minute. So for this particular trade,
so longer term overextended.
correct, which is one of the things that we look for this particular setup. So in terms of reasons to sell, or in this case, like reasons to cover, the idea is that once momentum is seen to the downside, in this particular case, you get a lower high, unable to move away from price once above VWAP, and you see volume come into the downside, and price gets back below VWAP, the stock should be able to trend lower. Therefore, my reasons to cover should be when the stock stops trending lower. This was a particular instance when I had to use my limit down rules. So for the first limit down, I'll usually cover a quarter of my position right at the first print, just because it can be a pretty erratic time, and then I'll evaluate to see over the next few seconds if there's going to be continued selling or there's going to be buying. And if there's significant buying, then get flat and reevaluate. If it goes limit down twice, I'll take more size off. I'll cover half of my position on the first print, and then I'll look to trade. I'll reevaluate to see if they're buying it back up, and if they are, then get flat and reevaluate. Another thing I'll use is I'll watch how far something gets away from VWAP, which is something that I've been flirting with to see if stocks get overextended either to the upside or the downside. And I'm also working on figuring out how I can use this for profit taking. So in this particular case, we'll actually double bottom with regard to how far away something gets from VWAP, which can be an indication of potential value buying if it gets extended to the downside, or if it gets extended to the upside, it might be an indication of profit taking. And then obviously if the trend breaks, that would also be a reason to cover some of the position.
Good, Alex, good. Rules, rules, rules. Good example right here of some excellent exit rules.
So in terms of trade management, you can see right here on the open, we get an opening drive lower, a Dr. S pattern where we get increased volume. So we know that institutions are selling this name, which is uncharacteristic of prior days. It does rebid, gets back under VWAP, but is unable to rebid above. It starts to form a little bit of a wedge and breaks down from the wedge on increased volume, goes limit down, and then right after the limit down opens back up, you can see that it's still buying. But we know that from the open, we see that institutions are selling this. One of the places that I was looking at was once price got back above VWAP, I wanted to see how it reacted and to see if it could move away from price or if it couldn't. And if it couldn't, that would be a signal for me to start a short position. So you can see that we get back above VWAP here and we fail to move away from price, like we didn't continue higher. And this is showing a lack of strength. So this was the first place that I ended up shorting, just risking this wick high, thinking that if we do get back below VWAP, we should begin trending lower. And then at 10:38, the Citron news comes out, and we see that the stock breaks below VWAP on elevated volume. This would be a place to short tier 2, risking back above VWAP. For these backside ideas, VWAP is typically my line in the sand. Once the stock breaks below VWAP on elevated volume, I don't want to see it get back above, or at least get back above and move away from price. So that's for tier 2. Then we can see after the move gets digested for a couple of minutes, we start to consolidate near the low of this base that it's been forming. When you see it start to consolidate below, or like near the low of that base and not really bouncing, that should be a place where you add on additional size. So you could short tier 3, again risking VWAP, anticipating a continuation to the downside once we break below this base here. And something that I've been trying to work on is trading around a core and scalping around a core. So one of the places that, if I were to go back and review this trade, one of the places that I could have added more size was on the break when you get this increase in volume for a momentum scalp. And you can just use a simple move or an exponential moving average as a place to risk against.
Good. And just what price would you have gotten in?
Yeah.
What did you see on the tape that would have got you in? And what would your stops have been for those additive tiers?
So we can see once volume does come in and the bids are skipping prices lower, the stock goes limit down for the first time right here. I'm okay holding a position through the limit downs because I see that it has been generally clean to the downside. So I know that on the first print out of the halt, I will cover half or a quarter of my position because this is the first limit down and reevaluate. And so since we don't see any real meaningful buying, there's no reason to cover the rest. And there's the potential for the stock to continue trending down. And then we end up going limit down again once I come out of that halt, cover half immediately on the first print. And then since you do see volume come in and you do see buyers stepping in, this would be a reason to cover, for me, this was a reason to cover the rest of my position and reevaluate when the price gets higher. Just because I don't know if maybe this is a place for institutions to maybe start buying this up if they want this. So, and then this was also one place where I think I could have done a better job, was looking for a re-entry, even though I already had one solid trade in the books. So we do see that buyers do start to accumulate higher, but they really aren't able to get it back above this $13 area. It gives us an indication that sellers are still in control despite the significant fall and despite the buyers coming in after the second limit down. You can also note the decreasing volume on the move higher after the second limit down, which doesn't inspire a lot of confidence for possibly taking any long setups. So once you see that we're back below 13, we're back below the 21, and we're starting to consolidate again, this would be a place that I should have been able to put more size on, anticipating a continuation to the downside. And I think here your risk is really well controlled. I think you could have risked like the wick high from the retracement, anticipating a continuation to the downside.
Good. I see that with elite traders. After it has the big move and the momentum is now to the downside, they short the pops. They look for opportunities to short the pops. I mean, this is really the early stages of it rolling over. And as we know, this ended up rolling over for a couple more days and went much lower. And so when you have that big first move down, and make your first big chops, it tends to pop back up and give you opportunities to catch some other leaking lower over the next couple of days, opportunities to short and really add to your profits. So good to look for that.
And then again, just going with the concept of shorting the pops, given that we have seen that momentum is still to the downside after going limit down twice, you can look to short another pop, risking the previous higher low, or lower high, sorry. It still shows you that buyers are still not in the name. They still don't want that. They still don't want to try to prop price up, and you should look for a continuation to the downside. And so one of my exit rules I've been developing is I created an indicator that'll show me how far something is away from VWAP, which can act as like an indication for potentially value buying if something's overextended. So when I see that we're getting down about the same, like almost 4 ATRs away from VWAP, this is a place for me to personally cover. I covered about half of my position and reevaluate, see if buyers step back in. And then if we zoom out to the higher time frame, we do see that sellers aren't able to push price any lower, so we do end up forming a higher low. And so in names like this, in any trade really, you want to be covering, if you're short, you want to be covering into weakness. So you really want to be covering into a higher low instead of trying to cover in a higher high, just as a way to maximize profits.
Now it's your turn. What trade brought you the biggest profits in this volatile market? Let us know by leaving a comment below right now.